Hi, I'm Max Keiser. This is the Keiser Report. Brexit special. What the frick happened? Well, I'll tell you what happened. Very recently, an entire nation, the United Kingdom, got very inebriated on a Brexit cocktail, which is made from 2 parts hatred of David Cameron, 1 part hatred of George Osborne, and about 47 parts of gin. Now, what's amazing is that the hangover from this is that Brits don't even know what they voted for. According to Google, the most popular search the day after was, what's the EU? Why did I vote to leave the EU? Who am I? It's one incredible accidental revolution. With me today to discuss Brexit, the implications, and what's going to happen going forward, Stacey Herbert, of course, and Mitch Firestein, author of Planet Ponzi. Welcome.
Mitch Firestein, you called this, you said Brexit would happen. Unlike almost any other person I know in the media, they were almost unanimous in saying that, Remain would win at the end of the day. But what happened is 51.9% of Brits, or 17.4 million, voted to leave the EU. Remain got 48.1%, that's 16.1 million. Now, are those 17.4 million people, are they uneducated and racist, as many in the UK media say?
Well, I watched the coverage, and I've been up for about 30-odd hours, and I watched the entire coverage, and it seemed like the state media for the UK was spewing bile and saying, they actually said that that everybody who voted to leave didn't have a college education, they were uneducated, and they didn't know this and they didn't know that. And then they said that as things progressed and it got worse and worse for the Remain camp, and it was obvious that there was going to be a win, they said this is going to destroy the financial markets, and they started the rhetoric that came out, that we saw later on when the markets, the biggest move was actually in Asia with the Nikkei.
I was kind of fooled by the outcome, because the Scottish referendum was a big dud. Then last year you had the general election where it was supposed to be close. Remember that Russell Brand was with Ed Miliband, and they had that whole labor insurgency, and then the Conservatives won big, and that was a big dud. So I figured this whole Brexit thing is a dud, because I can't imagine British folks getting up, going down to the polling station, and voting for what could possibly be an enormous and challenging, complicated extrication from years of entanglement with the EU. The markets, obviously, their first reaction was market sell-offs across the board. Now, you're a hedge fund manager, Mitch Firestein. So let's talk about the structural implications, because either A, there's a knee-jerk reaction and markets have sold off, and then we can look forward to them kind of coming back, or there's a structural damage being done. It's the end of a 30-year bull market in bonds. This is the top in a lot of ways, and this could be the beginning of a new secular move away from what we've seen over the past few years into something new. Your thoughts on that?
Well, look, I think, as we've recently discussed, that we're in a situation where central banks, the magical people of the world, have manipulated the bond market, the equities market, and the properties market to such grotesque, inflated levels that, reality is no longer a function.
Let me just jump in real quick and get your take on the property market in the UK. You've been on the show a few times over the years, and we've always pointed to the UK property market as the beneficiary, largesse, the Bank in England, the global central banks who print money. It doesn't go into the general economy. It doesn't increase wages. It goes into asset purchases and the property bubble. I saw that the folks that do the property building in the UK and the property agents, their stocks were down sharply. The bank stocks were shellacked. So is the property bubble in the UK, has it now, in your opinion, finally popped?
I believe the property bubble popped 18 months ago, and I think that there's a lag before you actually see the fallout from it. You're right about the property developers. I think the average decline today was around 25%, but Persimmon, which is one of the biggest in the UK, dropped, I think at one point it was down 50%, their shares, and it closed down 40%. So this is a gigantic problem, and I think that's why you've seen all this massive, in London, there's so many projects, so much building going up and up and up. That's why you saw in all of these centers where everything's being built, you saw the vote was to stay and to remain. to facilitate the property bubble and push everything higher, 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 and higher. But that is going to be deflated, and there are no more buyers. So we're going to see that.
Well, is this oversold? Because here, first of all, let's talk about those headlines. House building shares are being hammered by Brexit. That's one of them. And here are the sea of red in the home builders and banks. Like RBS was down 34%, Barclays down 30%. But is this oversold? Because when you're here in Manhattan, which is not part of the EU, there are plenty of Chinese buyers here, plenty of Russian buyers here, plenty of French buyers here, plenty of Brazilian buyers here.
But it's a diversified economy here in New York. London is a monoculture. It's one game in town, property speculation. Yeah. It's like a company town, like Hollywood is to movies, what Detroit used to be to cars. London is to property speculators. It's not a diverse enough economy to sustain a collapse in the property market.
The other point with this, with all these and the property developers, as opposed to the insolvent Royal Bank of Scotland, when you say that it's dropped 30-odd%, and you talk about Persimmon, that's trading at much higher levels. Mm-hmm. So the actual move is much bigger, right? Because you're talking about like the RBS is like a penny stock now that the government owns or the taxpayer owns.
The taxpayer owns
Right, but they should have put them out of business and shot them in the head like an old horse, a long time ago. The property developers are going to have a problem because there's too much leverage, and Osborne's Ponzi scheme of help to buy, we all know this, and now there's nobody to rent. So, you're not getting people to pay the outrageous amounts for rent in London, and there's overstock.
Right. I mean, you have, like, in Thailand in 1998, I believe, we visited Thailand, and the crane stopped in mid-project. And it was just time stood still because it all. And you have a chart of the pound, right?
Yes, we have some.
I want to look at the pound chart because leading up to this vote, the pound was moving up on confidence that the Remain camp was going to win. And now we have to ask ourselves, if the assumptions of the Remain camp and the pound and the markets were so dead wrong, then we have to ask ourselves the assumptions about where this property market is going. When you do property development in London, you have to make forward-looking statements in the prospectuses and say, we think over the next 5 to 10 years, there's going to be X number of demand, and this cost is X, Y, and Z, and you float that prospectus. But if your assumptions now are completely proven to be 180 degrees reversal of reality, then all those prospectuses are garbage. None of the assumptions are correct.
Yeah, but if you're the developer, you've already got the money, so the investor loses and you take out your cut, so it doesn't really matter because there's zero accountability and no transparency. Because at the bottom of that statement, it also says we don't guarantee, the past, or we don't guarantee this statement is forward-looking that we can guarantee you a return on your investment.
Okay, well, let's return to this article here. This is from FT's John Authors, and he says, this is how sterling has moved versus the dollar the last 2 weeks. Why so certain? And now, I want to look at the short term on this. I know there's a long-term chart that you have a discrepancy with this, but in terms of how the markets get this so wrong, how the pollsters get this so wrong, how the elite get this so wrong. They got it wrong here in America. Over and over, they mocked the notion that Trump would win the nomination for the Republican Party. Over and over, they said those people are just racist. It'll never happen. And that drop on the pound sterling is very similar to basically the drop of the Republican Party once they had to concede that Trump won. What is there just such a huge disconnect between the city dwellers, the urban people, the media elite, and the rest of the economy? Is this what we're seeing here?
Well, I think that there are several reasons for this. If you look at this chart, you'll see that it very briefly touched up at 150, and then it dropped down to a bottom. I mean, this doesn't even show the bottom.
So the blip up was when everybody thought actually that Remain was going to win.
Right. They thought that Remain was going to win. Now,
based on the exit polls.
But not just exit polls. What happened is some investment bank or somebody with really deep pockets went into Betfair, and they put $85 million to rig the odds to make it appear that there was a big advantage. That was part of it. Also, I believe that the Tory party, when they extended that period, because they wanted a lot of young people to register, they got 2 million young people because the percentage, I don't remember, was something like 70 to Remain and 30% of young people to leave. So what they did was, they tried to rig it. So they just assumed, they said, we've rigged this, it's all set, we've got the fixes in, go out and bet, and the investment banks tried to make it, or whoever the big pocketed.
Well, get into the chart for a
$85 million.
second, because this is, one of the biggest winners in all this, of course, is George Soros.
Yes.
Who made a huge amount, £1 billion or so, breaking the Bank of England, going back a few years' time. But, he wrote a book, The Alchemy of Finance. One of the key concepts in that book is reflexivity. In other words, when markets start to believe their own hype, they can go to levels that make no sense. The idea of an efficient market has been proven to be a hoax over and over and over again. There is no efficient market. Markets are very inefficient in the short term. In the medium term, over the longer term, you may make the case that they do an adequate job in distributing risk and reward. But in the short term, they can be extraordinarily distorted, Mitch.
That's right. Well, I think that the real thing that BBC and Sky and all these guys were reporting was narrative, because we've gone from Project Fear, it's morphed into the blame game. So now they're going to blame everything on Brexit. With my chart of what happened with sterling, you can see in 2008, sterling was trading at $2.09 per pound, and it dropped in a couple months down to 139. So that move was around 34.5%.
That was during the financial crisis.
Right, but it stayed in this range. It stayed in that entire range. It hasn't popped really back up above that. So, we had this temporary time period. The 2-week chart that you show is the only time we had a breakout to the upside, and only to 150. So this down move that they said was the biggest move ever was only 10% that they're reporting, and this was more like 35%.
That was over a month, but this is the biggest move on a one-day. In fact,
one-day event.
It happened within 4 hours.
Right.
So, however, you're saying that when they say it's now at a 35-year low, you're saying, well, a lot of the move already came during the
I'm saying that we've been in this band of 139 to the top of the band is like 155 for since 2008 for 8 years, and the cause of that is too much debt, too much credit, and too much leverage. That's what the problem is, and they haven't resolved anything from the crisis.
Let me show the audience that so you can see clearly that this is the big drop that happened in 2007, 2008.
Well, now clearly a lot of people voted to leave, and they had in their minds that this was going to be a benefit to them in some way. There will be winners and losers. There will be, I think when we come back after the break, it would be maybe a good idea to look at potentially who could be the winners in such a scenario. I know this is not necessarily what we've been focusing on, but I think it would be a good topic to pick up after the break. So let's do it. Let's go to a break right now. And when we come back, much more Brexit talk. And help yourself to a lovely Brexit cocktail. Welcome back to the Keiser Report. I'm Max Keiser. We were talking about Brexit freakazoid episode in the earlier half of this program. We're back. There's got to be some winners in all of this. Gold, of course, skyrocketed on the news. All the gold miners are quite happy. We've got Stacey Herbert. We've got Mitch Firestein. Let me just preview and forecast a couple of the ideas here we can get into in the second half. I mentioned gold. We can also talk about now a new Scottish referendum 2.0. That's back on the table. Irish unification. This is also back on the table. Jerry Adams is tweeting that he wants to see, Ireland reunited. France exit, Italy exit, Trump in Scotland. Another, this is all happening.
We have the knock-on effect of the political side, but what about this economic side? Because I want to talk about the fact that all the bank shares tumbled. In the U.S., they tumbled as well. But in Spain, we saw the banks tumble. Italian banks were down 20%. Is this because this tumbling of the banks by 20%, is this because that they're connected in some way to the UK? Or are people betting on what Max is talking about, a French exit, an Italian exit? Because certainly the likes of Italy know they're up next in terms of a Greek-like situation.
It's what I've been saying on the program for quite a while. And if you remember, I said Italy specifically, out of 160 countries in the world, there are only 2 countries that have worse growth from 2000 to 2016. And it's Zimbabwe and Haiti. So their GDP is pathetic, anemic, but yet their bond market is one of the biggest in the world. So all of these banks in Italy, the Italian banks, are stuffed to the gills with these bonds, trillions of dollars worth of bonds that Mario Draghi and Mario Monti, when they were at the Bank of Italy, they made a deal with Goldman, and Goldman got these bonds issued, and now Mario Draghi's at the ECB. So this becomes a taxpayer liability.
Yeah, and now people always argue, well, if Italy weren't part of the EU or Greece weren't part of the EU, or if Puerto Rico weren't a colony of the US, they wouldn't get such low interest rates. But the flip side of it is it creates these very precarious debt situations in Italian banks, in French banks, in Spanish banks, that they borrow more than they should have in the first place, Irish banks.
But that's what people in the UK, the winners were the UK citizens, because they have capitalism, they have sovereignty, and they won't have to pick up part of this bailout when all these sovereign bonds fail. With
but
the
you
ECB,
mentioned sovereignty.
Right, their own.
Only Parliament has the sovereign right to rule on this. So are they going to accept this referendum, or aren't they?
Well, I would bet that they're going to have to. I mean, I know that it's not palatable, and they thought that the fix was in, but I think that they're going to have to accept it. And I'll tell you something really quickly. I mean, in 2012, when we were publishing my book, Planet Ponzi, I was sitting down with my editors over at Random House. Hi, Sally. And I had a discussion. I said, this guy at UKIP, Nigel Farage, is going to cause generational change with his ideas to get the UK out of the EU. All of them said that I was crazy, and they bet me money, which now they can pay me. But so it actually happened, because what happened, and in the last part of my book, I'll give away part of the ending. It says people are going to just get to the point where they're not going to trust the government anymore or the mainstream media or traditional media, because they're misreporting the facts to suit a narrative to fit a political agenda. And that's what we've got.
Max, I want to ask you a question about this, because he mentioned a generational change. What do you think about the fact that in the UK, it was millennials who voted to remain? It's the baby boomers who voted to leave. We see a same sort of divide in the US, like millennials overwhelmingly went for Bernie Sanders. They overwhelmingly rejected Hillary Clinton. We have that millennial versus boomer divide. They're now equal in sort of voting block size. And we also have, the urban versus rural, sort of the urban versus deindustrialized area anyway.
I think the millennials in the UK are completely naive. Yeah. They've been brainwashed. They buy into the dream that was put forward by David Cameron that we're all in it together. Meanwhile, their parents and their grandparents are suffering from complete loss of dividend income in their retirement accounts, lost wages, and a huge social split between the have-yachts and the have-nots. And now we're just seeing the populist uprising hit the UK. We've seen it in Cairo. We've seen it in Athens. We've seen it all across America, in Mexico. The global insurrection against banker occupation is now firmly afoot in the UK. Is Nigel Farage even going to be there in a year from now? I don't think so. Look at the French Revolution. All the organizers within a year or two were decapitated, including Maximilien Robespierre, who eventually was also decapitated. These guys who came forward to lead this revolution, I predict within a year to 18 months, will be gone.
They'll be out of maybe power, but there will be a new wave of people coming in. But what about also the notion that, I know you reject it, but what about you? I see that in the U.S., you have all sorts of investors. The U.S. invests in little countries like Switzerland, little countries like Uruguay. It doesn't matter how big or diversified your economy is. I don't understand why you need to be part of the EU in order to have trade deals. Can't they just still... China's invests heavily into the UK.
Yeah, that's the problem. It's a narrative that they pitch. I mean, the UK is better off out. I'm telling you, economically, from an economic perspective.
What is the economic perspective? Why are they better off out?
Because if you look at the cash flows that are coming in and out of the country, Europe's not going to cut them off from one of their biggest trade partners. Because if their economy is not growing anywhere throughout Europe, like I explained in Italy, they're dead. The same thing with Spain, the same thing with France. So if they can generate extra GDP by trading with Great Britain and the UK, they're going to do that, of course. It would be shooting themselves in the foot. It would be very counterproductive.
The UK's got financial services, okay, and this is what they have is a rentier economy, and they're at the nexus of the European center for money laundering and other financial crimes. Now, with Brexit, that is in question. A lot of that business is going to flow to Frankfurt. So their ability to skim the cream off the top is diminished. And that means less cash flow, and that means less ability to keep that top 1/10 of 1% happy. And meanwhile, there's no manufacturing base. I mean, so what the pound drops down to record lows? Does that mean that they're going to go back into the factory and start, building shoes, and they're going to start building, stuff? And that's not going to happen. And maybe in 20 or 30 years, they have to rebuild the entire industrial base. That's not going to happen in 1 or 2 years.
But there's still some productivity in the UK. I mean, they have a big military industrial complex that you're forgetting, and then they export that. But they import a lot from the European Union. So they're not going to cut off their most valuable trade partner. I just don't buy that.
Yeah. Okay. Now, Max was asking about the positive side as well. Now, markets panic, and in this article in Market Watch, 7 reasons not to panic about markets, reaction to Brexit. And markets often panic, but especially in this case, when it seems that everyone took the same bet. Everybody was betting on one outcome. Well, maybe you're the opposite, but the fact is, because they all took the same bet, they all had to unwind in the same way. So the same things sold off. So would a classic investor like a George Soros or a Warren Buffett, would they say, well, when there's blood in the streets, that's the time to buy? Is it now a time to buy things like, the shares that were down 50% in the home builders, or German stocks were down 10, 20, 30%? Is this a time to buy?
I think we're still grossly overvalued. I mean, you're not going to hear that we've got buy this dip from me. I mean, because I think that we were in Uber bubble land, and Uber bubble land squared, and now we're just in Uber bubble land
squared.
Let's say it 10 times fast. So I mean,
didn't Europe ban Uber bubble squared?
Yeah, that's a derivative of an Uber.
How
bubble.
about this chart with,
yes.
with the FTSE, which I heard today was one of the worst days ever. Now, if you look. Today, when we closed, the FTSE closed higher than it did 9 days ago or 10 days ago. So it wasn't as bad as the BBC was reporting, all doom and gloom.
Right, stocks are still way overvalued.
Yeah, but they're grossly overvalued.
Okay, let's go back to 1982. It was the beginning of a bull market after a 16-year bear market. There are things called bear markets. The markets can top out, and they
Central
can be...
banks stopped that, though. There are no more.
Well, the central bank magic, as you've described it, the policies like negative interest rates, QE, they've tried every trick in the book, but it looks like they've run out of tricks, and there was never enough GDP generated to pay down the debt. So we go into a protracted secular bear market that could last 10, 15, 20 years. That's perfectly normal.
Well, Japan's the example, 30 going on 40 years. But, it's different this time. You saw how Japan dropped, 1,300 points last
But they had an enormous pool of savings that they chewed through to keep them going. Now that's gone.
Well, they've got a printing press because they can print as much yen as you want. And the unintended consequence was they were trying to debase their currency, and their currency strengthened as a result of this and was dipping down near the 100 level.
How dangerous is the yen rising to the global Ponzi scheme?
Very. I mean, I think Japan's a big problem that we covered last time. I think.
Can I interrupt here to talk about the Brexit vote? So I want to bring it back to the economic story of the UK, of the United Kingdom, where there used to be a huge manufacturing base. It used to be an empire. They used to build all sorts of things. They used to make cars. They used to make refrigerators. They used to make air conditioners. They used to make things like America used to. Right here in America, we have that story of Make America Great Again. Americans also don't have jobs. They no longer have manufacturing jobs. Tell us about the role of that in this vote. Tell us about the role of the central banks in creating a class of people who are so ignorant of the vast swathes of their population. 95% of the rest of the population, as Henry Giroux right here on Keiser Report said, most people in our economies are now they're disposable. We don't need them. But we have this conflict now emerging that every time there's a vote, these people do have a vote. And I see more and more of my neoliberal friends, my sort of friends that vote for Hillary Clinton, they're like, we should get rid of these uneducated, stupid people who are voting. We don't want these people to vote. So where is this clash? Tie that all together. Let's bring this whole story back into the whole global economy.
Yeah, to square the circle, really.
Yeah.
But I think the issue that you're talking about is the central banks and the politicians. They're out of touch with the general public and the public. So what they don't realize, because they're elites in the ivory tower, none of the people at the central bank and the Fed members get paid $5 million for a 12-year term that they're guaranteed, and they can make as many mistakes as you want. They've never had real jobs, most of them, and they've been in academia. So everything looks nice.
Yeah, we know that, but what about the results? Tell us about the results.
Is manufacturing has out, and everybody's fed up with it, and they said, look, you're telling us that these numbers, unemployment, everybody's employed, but we don't have jobs and we can't feed our kids, and you're saying that there's no inflation, but our food prices have skyrocketed, our costs have skyrocketed, tuition, healthcare, medicine. I mean,
plus in the UK, you have austerity. Right. George Osborne and David Cameron have imposed austerity upon much of the population.
But people have to pay for housing, and housing costs have skyrocketed as well as insurance costs. So the housing bubble has created a big problem.
Well, I'm going to have a sip of my Brexit cocktail.
Yeah, it's time for Brexit cocktails, and that's about it for this episode. Mitch Firestein, thanks so much.
Thanks for having me.
Well, that's going to do it for this special Brexit episode of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Mitch Firestein of PlanetPonzi.com. Until next time. Bye, y'all.